Hello friends, today we will discuss on easy options. And options is a strategy to get rich very fast, but be careful, it can wipe out your capital very fast. First thing we are going to start is the understanding an Opstra. This is a platform which is free on Google, and this helps us to determine whether we are going to be profitable or what is our range in an options strategy. Disclaimer is standard. It's a free educational platform. We do not offer any kind of paid courses. We do not intend to change anyone's investment or trading styles. All presentation under this forum are for education purpose. None of the mentors in this platform are SEBI registered and do not guarantee results in any form. They are actually sharing their experiences with you to make you more profitable. Please understand the concept and do ample back testing and paper testing before you take any kind of trades. The first step is understanding Opstra. What is an Opstra? Opstra is an option analytics app comprising of several tools that help to find, analyze, and track option trading opportunities. This is available for indices and the Nifty FNO stocks. It also allows free strategy planning and storage of 2 trades as in default in all the in the free platform. How do you determine an option strategy? Is actually 6 steps. Formulate your investment objective, determine your risk reward payoff, check for the volatility, identify the events, devise a strategy, and establish option parameters. So how to start using Opstra? Moment you type Opstra in Google, you will be directed to this page. You can make an account using your Facebook and or a Google account. So once you press on this button, get started, it will this kind of page is going to open up. The first thing here where Nifty is written, here you can, there is a drop down menu. You can look for Nifty, Bank Nifty, Fin Nifty, and all FNO stocks here. The second line is the spot price, the future price, the lot size, IV percentile, and the Nifty IV chart. The next is the date, which is given here. The second is the third line, which we are going to see is the options or the futures. This is there in the drop down menu. This is the expiry, which we have to select. If we want 27th May or we want 30th of 28th of October, it all can be chosen. This is the option strike price, whether you want to sell or a call or a put. This is from where you are going to choose buy and the sell. And from here, the drop down menu, you get the option chain. Now, look at these lines. The first is the last traded price on the call. The call is on the left-hand side of the screen and the puts are on the right-hand side. Next is ITM probability, the probability that this strike price, a particular strike price will turn ITM in the money. Then is the call IV and the call delta. Same way towards the put side, you have a ITM probability, last traded price, IV, and the put delta. Whenever you select anything or make any strategy, a payoff graph comes. In the center is the line where the present spot price is trading at. Then you see the probability of profit is the next line. This is 95.35%. The maximum profit which I am going to make if I deploy this strategy, and what is the rate of gain on the capital which has been deployed. What are the break evens? So long as I am within this range, I am going to be profitable. This is the total P&L which is standing at present. And the last line is the net premium which has been utilized to make this strategy. Before we go and understand in an easy option technique is, please try to understand the concept and the logic behind it. observe the underlying movement and understand it very properly. Your view on underlying is most important. Initially do paper trade. Market is not going to go anywhere. Gradually increase your position. Don't jump in a big way in any of the positions. Despite perfect setup, stop losses can be hit. Learn from your mistakes and always customize technique, but don't break rules. Now, option selling before we start can be very dangerous, like what happened recently when the bank Nifty literally ran 3,000 points in a matter of 5 days. All the call writers had a big issue in holding on to their positions. Had Bank Nifty not retraced, most of the call writers would have incurred huge losses. I personally had a position which I have discussed with you previously. Our main aim when we are doing an option selling or what we call option writing is we are planning to earn by theta decay. So remember first 4 P's. These 4 P's are most important. Your passion to make money in option selling. Patience is the key. Persistent. And then comes last, profit. These 4 P's comes in a sequence. You can't jump directly from passion to profit without patience and persistence. This is a standard graph for an option decay. We get around about 3 months time. So 90 days ago, you can see the option price movement is very less, while in the last few days is almost a nosedive. So the fastest decay comes when it is close to the expiry. Now, if we go to and type on Google, most profitable options strategies, it gives an answer. You can see the number of results is too high. Most successful option strategy is to sell out of the money put and a call options. And if done correctly, can yield 40% on annual basis. So if you properly do it, so you can get 40% money on your investment. So try to understand this concept. Now, how to play very safe in options. Choose far away call and a put option for writing. I usually do when I want to do is I choose a delta of less than 10. ITM and probability should be less than 10. Premium should be around 50 to 70 days. Expiry time should be little less than 2 weeks, around 10 days. This is the maximum I'm looking at. Please take a screenshot of it because this is how we are going to discuss our strategy planning. Now to check these, let's go to Opstra. Now this is an Opstra site. You can see yourself. So I log in with my Google account. And what does it shows me? Now you see this is a strategy for October 14th I have made. Now I entered by selling a put at 50 rupees and an equally priced call option was sold for the same expiry. Now this was 34,000 PE and a 40,000 CE. Check my probability of percentage, 95.35. The chances of my failure are less than 5%. I will make 2,500 rupees, which is 2.13% on the total capital of 1,17,000 I have deployed. My break-even range is between 33,900 to 40,100. And in single day, I'm standing at a profit of approximately 800 rupees plus. Now let's go and make one strategy on our own. This is the first window I had shown. You have Nifty. From here, we are going to choose Bank Nifty. I am very comfortable in doing Bank Nifty. I seldom do anything else. My expiry is 10 days from now. That is 14th October. The Bank Nifty is trading at 37,300. Now on the bottom side, we have an option chain. choose all strikes. Now go, the first rule is the ITM probability should be less than 10%. So you see here, it is 9.8%. We have to choose for 50 rupees. There's nothing for 50. So the next which is available to us is at 71.85. So we sell one put option here. Now comes to the call side. Call side, we have, this is 39,400 is available at 62 rupees, because since we have sold around about 70 rupees, so we like to keep as close as possible. We like to balance it or hedge it with that position. So if I sell this, just see my position is 35,000 P is sold, 39,400 C is sold. This is approximately 2,100 points on the upper side and 2,300 points on the lower side. Probability of profit is 87.27%, pretty high. 2.5% on my capital deployed. And what the profit I'm going to make is 3,348 rupees. And my break even is 34,867 to 39,530. Market, even if expires at 39,532, we are still going to make profit into it. So the chances of you are breaking this range are very less, is less than 13%. So this is the most important concept one must keep in mind when you are making your strategy. If your probability is going to be high, you are likely to pocket full profit out here. Is tomorrow I'm going to deploy this strategy and I'm going to earn this money on 14th of October at the time of expiry. So I'm done with my presentation. Okay, I will show you one more example. Now, if I go and choose for all strikes. So let's go and do it in Nifty. We have done already in the bank Nifty. For Nifty, I will like to take a lesser amount of position. We like to keep somewhere around about 40 rupees. The probability, you see in the Nifty, this is 14th October. For any probability, we are not going to get more than around about 30 rupees is the likely target for us. So we sell 130 here, put 16,900. And we will sell an equally spaced around about 18,100 call. And we'll just see it. The probability is 80%. The maximum profit is 3,188, which is an approximately 3.17% on our capital of 1,600,000 rupees, which is deployed. And our break evens are 16,837 to 18,163. So this is how a safe strategies are done. I'm practically more comfortable when I'm doing Bank Nifty because I have been doing it for long and I like trading only in the Bank Nifty. Now this is what is the presentation is for today. Now I will take you to the discussion part. Thank you.